Well, today was a good day in the stock market. The indexes performed very strong today and a lot of stocks made massive moves upward. So we're going to go through all that here today, okay? But that's not the biggest part of what this video is going to be dedicated toward. Today's video is going to be dedicated toward two different things. The first is I want to explain to you guys why the stock market should be up much more than where it is currently, okay? We're going to go through a lot of different charts. I'm going to explain a lot of things to you guys on why I believe the stock market should be up massively more than where it is. I'm talking about the Dow, the S&P, the Nasdaq, everything across the board. These indexes, in my opinion, should be up much higher. And the next part of the video, we'll talk about the two things that need to happen in order for us to have a massive bull market going into the rest of 2018 and into 2019. There are two things that need to happen. So I hope you guys really enjoy this day. Hit a thumbs up if you enjoy this. And by the way, if you have not gotten tickets yet to my Building Wealth Conference, it's going down in just over 2 months from now. It's a full day with Graham, Stefan, and myself. We're talking stock market investing, real estate investing, and personal branding. I'm going to spend about 2 hours on that. So anybody that wants to build a personal brand, that's going to be another huge chunk to why you want to come to that conference. So first link down there in the description. I hope to see as many of you guys there as possible. All right, guys, so let's get into this. So first off, the stock market today, very strong day. Dow was up over 250 points. S&P 500 had a decent day. Nasdaq was up about 8%, but that doesn't tell the whole story because there were a lot of stocks that performed much stronger than that, okay? So if we look at just the stocks I own here today, in terms of red ones, we only had Toll Brothers, which was slightly red today, and Tesla, which was slightly red, but a lot of stocks performed very strong. Cruisy Doozy up over 4.5% today. Baba's starting to bounce back. That one was up over 2% today after a strong day yesterday. Facebook's starting to bounce back. That one was up 1.8% today. Skyworks Solutions was up over 3% today. A lot of stocks performed much stronger than where the indexes actually performed today. Indexes, you can say, well, it was a decent day, a little under a 1% performer, but a lot of stocks made 3, 4, 5% moves today that, kind of needed that, all right? Now, if we look here, if we look at the indexes year to date, it looks like it's a decent year. Keep in mind, the stock market on average only goes up around 8% roughly per year on average, okay? But if we look here, the Dow's up nearly 8% year to date. So you say that's good. It's not good, okay? The S&P 500 is up over 9.5% so far year to date, okay? So if you're looking at the Dow and the S&P, you're going to look at that and you'll say that's not bad performance. Like they're doing decent, okay? But trust me, I'm going to take you through a whole bunch of different things today we're going to look at on why these indexes should be up much more. The only one that has performed, in my opinion, where it should have performed so far this year is the Nasdaq. The Nasdaq's up over 16% year to date. A lot of that is honestly on the back of Apple and honestly on the back of Amazon, okay? AA. There's honestly a lot of it is on the back of those two companies. Yeah, Facebook has kind of held things down a little bit. It hasn't had a good year, Facebook this year. Microsoft's had a pretty decent year and that's definitely helped out the indexes. And Google's had a decent year and that's helped out the indexes in terms of the Nasdaq and whatnot. But trust me, these indexes are not up nearly as much as they should be, all right? The first thing I want to take you through is U.S. corporate profit trends. If you look at this graph, you're going to see a massive increase here in 2018, all right? A massive increase. If you look at 2016, 2017, very slight growth, and then all of a sudden we get into 2018 now, and you see explosive growth in U.S. corporate profits, okay? A massive increase, and it's just getting stronger and stronger as we go throughout the year here, okay? Now, there are a couple reasons for this, okay? The first reason is U.S. corporate tax cuts have helped a massive amount in terms of boosting up profits. So that's definitely helped. There's no doubt about it. But on top of that, you have a lot of companies whose businesses are just very strong because the overall economy is strong and they're just knocking numbers out of the ballpark and they have economies of scale and a lot of things like that, okay? So when you have all these different trends, it's pushing up U.S. profits in a massive way. Some of the biggest we've seen in a long time in terms of corporate profit increases, all right? So that's a very good thing with some of the strongest growth we've seen in a long time there, okay? Next part I want to point out here is we have seen an 80% beat rate by S&P 500 companies in the last quarter, somewhere around there. Around 80% of companies have beat. So basically meaning 4 out of every 5 companies that report numbers report better numbers than analysts expected, okay? So that means only 1 out of every 5 companies either missed earnings or just was in line and they just met earnings, okay? That is a phenomenal beat rate. We're talking about 4 out of 5 companies are literally doing better than what analysts had expected. That is a really strong statement for the stock market overall, okay? You have US corporate profits exploding. You have massive amount of companies beating earnings, all right? And then on top of that, we see around a 24% increase year over year in profits by companies. This is a massive, massive increase there, guys. And keep in mind, there are a lot of companies that are still spending money on a lot of things and are hiring a lot of employees to build out factories and do a lot of things. You can think about a lot of the growing companies that are in the Nasdaq. They're spending a lot of money a lot of places and ramping up employees. It's not like it's time where all the companies out there are saying, let's cut back on employee costs. A lot of them are spending aggressively on new things, okay? That's something to keep in mind there, all right? Now, if we look at some overall U.S. economy statistics here, all right? Something I love to look at is the GDP growth rate. We're going to notice we have a much stronger U.S. GDP growth recently than we've had in a long, long time. The latest trend came in at around 4.2%, and they're talking about we could push up close to a 5% number possibly in the back half of this year. We'll have to see if it happens. But needless to say, when you have GDP growth like that, it means you have a very strong economy. We haven't had a 4+% number since honestly about 2014. It's been quite a while. So all of a sudden you push up against a 4+% number, and you can see, with corporate tax cuts coming in the way they have, and that type of GDP growth, you're going to have an overall great environment for companies to report earnings, profits, and all those type of things. Next up here, I want to look at the unemployment rate. We're at the lowest unemployment rate we have had in a long, long time in this country, okay, United States of America, under a 4% number right now. Now, we'll dive into this one just a bit, okay? There's a positive and negative to that, and then we'll get into the two things that need to happen in order for the stock market to explode throughout the rest of 2018 going into 2019. There are two ways you can look at a low unemployment rate. The negative side of a low unemployment rate is we can say, wages are going to increase. You have hardly any employees. Companies have to really start competing for employees, because basically what happens is when you have a recession, coming out of a recession, there are a lot of employees looking for a lot of jobs. They are in no position of power, and you, the corporation, can basically dictate whatever wage you want to pay them, and it's very easy. And it's like, okay, you don't want to have this job? We'll hire this other person over here, because there are a lot of people hurting, a lot of people looking for jobs. However, when you're in a very, very strong economic growth environment like we are right now in the United States, you have a situation sometimes where honestly the employees, the regular folks out there become in the position of power, because there are so many companies that want them, okay? It's ridiculous how many jobs are available out there that are actually unfilled right now that companies would love to hire for. So which sometimes you have happen is wages begin to start going up and up and up. They don't go up massively overnight, but they do start to increase. So you say, well, wages are increasing for a lot of companies. That hurts some of their profit trends. But at the same time, when you have huge tax cuts coming on your back and you have an overall stronger economy, which means a lot more people are going to spend a lot more money out there, it's an overall good trend in the end, okay? So that's kind of my view there. Now I want to get into the two things that need to happen in order for us to have a great back half of 2018 for the stock market and going into 2019. The first is the trade war needs to calm down, okay? The trade war needs to calm down. It's not necessarily that it needs to end. It just needs to, the language used, fighting, it's just intense battle, okay? If we can just calm down and simmer down, and we can see some more negotiations happen more in the background rather than, Twitter and, the Chinese government making announcements out to the media and it gets all over the U.S. markets and whatnot. If we can have some more closed door meetings between these two governments and it goes more professional, let's put it that way, we're going to see that all of a sudden this whole worry that is the main worry that's going over the stock market right now will start to slip away, okay? This is the main thing that has honestly, in my opinion, kept the stock market from exploding. I think a lot of the indexes would be up 20+% so far this year, or currently 20+% every single index, if it was not for the trade war and the tough talk and all those type of things out there. I think that's just freaked a lot of people out. It's made a lot of people think, man, is China going to go into a massive recession or something? What would that do for the credit markets? It scared a lot of people, and a lot of people just worry and could boil over in the U.S. And so in the U.S., it's just a lot of worry out there. There might not be anything concrete, but it's a lot of worry for investors out there, mutual fund managers, hedge fund managers, high net worth individuals that say, man, I don't know, until this is cleared up, I'm a little scared right now, okay? Because we know China has been probably the biggest growth engine for the overall global economy for the last decade, all right? And so you have the US economy very strong right now. A lot of people look at it and they're like, okay, if China's economy goes down, where is that going to send the US economy? So if we could just simmer down, if we could just calm down a bit, okay, take a breather there and maybe get some deals worked out, all right? And you know, everything can be copacetic, and not everybody's going to be happy, okay? The US probably is not going to be happy with it, you know, certain deals they do. The China is not going to be happy. You know, everybody wants a position of power. Everybody wants to win in the end. But if we could just get things to calm down a bit, guys, this is a massive, massive thing in the psychology of investors out there. So this is the first trend, okay? The second thing we need to have happen in the back half of 2018 going into 2019 is a profit trend needs to keep going, okay? What we're going to have happen here in the back half of the year is we're going to have a lot of companies who begin to start doing their forecasting for where they expect profit growth and revenue growth to go into 2019, okay? That always happens, you know, toward the end of 2018. What we need to see is we need to see strong numbers, okay? We don't necessarily need to see as strong a numbers as you know, 2017 going into 2018, but we still need to see a lot of strong numbers so that the profit trend is not going to end, okay? And if we could get companies saying that on average they expect at least profits to go up 7 to 8% next year, we're going to be looking at a very, very positive thing out there, a big catalyst for you know, companies. However, if profit trends are only very slightly up, 1, 2, 3% numbers for a lot of big companies, then we're going to see a lot of investors say, whoa, that's really slow growth there. Maybe I don't even want to invest in the stock or the stock market in general. And then you have the risk with the trade war, okay? So if we could just clear up those two things, and if there could just be a calming of the trade war, okay, a calming of the trade war, and if we can see companies say that they're going to have pretty good profit trends going throughout the back half of this year, we're going to be in a very strong position of power going into the rest of 2018 and 2019, and we could see the stock market perform where it should have been, you know, performing all this year. We should be up 20+%, guys. This is arguably the strongest year I've ever seen since I've been in the stock market in terms of company profits, in terms of the overall US economy. This is the strongest year, okay? You can make an argument that 2010 coming out of the recession was a strong year because company you know, profits went up a ton, but you're coming off of a recession base where all companies were in the dumpers in 2009, and they start to come out in 2010 and numbers look decent, but they're still, you know, we're garbage compared to today. This is the strongest year I've ever seen since I've been in the stock market in terms of company profits and in terms of overall US economy, okay? The market should be up massively. They should be reflecting this, and they are not as of right now. But if we can get those two things cleared up, guys, it's gonna be a fun back half of this year. So anyways, I hope you guys really enjoyed this. As always, let me know what your opinion is down there in that comment section. I would love to hear from you guys as always. Don't forget, if you want to come to my Building Wealth Conference full day with myself and Graham Stephan, it's the first link down there in the description. I hope to see as many of you guys there as possible. It's going down in just over 2 months from now out here in beautiful Las Vegas. Thank you for watching and have a great day.